Hello everyone, welcome to BISP Solutions. So today we are going to start with Accounting Standard Codification 605, that is revenue recognition. So here we will be seeing what is the introduction. That means we first will cover the introduction, that is what is revenue recognition. Then we will start with 5-step revenue recognition model. Okay, so 5-step revenue recognition model, and then we'll see what is contract cost, and then we'll see the presentation and disclosure. So let's get started. So here it is first transaction. In that transaction we'll talk about specific revenue recognition. Then what is revenue? Revenue is the generating activities. Then we have some arrangements under which a vendor will provide multiple deliverables to a customer. So we have here a transaction specific revenue recognition. There are some arrangements which a vendor will provide multiple deliverables to a customer, reporting revenue, gross or net of certain amounts which is paid to others. Then you have to account for consideration which is given by the vendor to a customer, and the use of milestone method in arrangements that include research or development deliverables. Now Accounting Standard Codification 606 is a single principle based model which depicts the transfer of goods or services to a customer at an amount that reflects the consideration. So, and it does not apply to the following. First, it does not apply to lease contract. Second, it does not apply to insurance contract, financial arrangements. Then it also does not apply to financial instruments, guarantees, non-monetary exchange between the entities in the same line of business to facilitate sale to the customer. So Accounting Standard Codification, this standard for revenue recognition is standard for revenue recognition. Before it was replaced by Accounting Standard Codification 606, that is revenue from contract with customer. So Accounting Standard Codification 605 lacked a consistent framework and contained many industry specific guidelines, leading to inconsistency in revenue recognition practices. While its core guidance for revenue recognition is no longer relevant, Accounting Standard 605 still contains guidance on separately priced extended warranty and product maintenance contract, and continuing for losses on certain contracts. So what was actually Accounting Standard Codification 605? So it was former revenue recognition standard. It was a previous standard for recognizing the revenue under US GAAP. Industry specific guidelines were there, like it was collection of specific rules for various industries rather than a unified principle based approach. Inconsistent application was there. So this lack of standardization made it difficult to compare companies' financial performance and created challenges for the business. Now accounting, that's why it replaced 605. It is replaced by 606, and it does not apply to lease contract, insurance contract, financial arrangement, financial instruments, guarantees, non-monetary exchanges between the entity which are in the same line of business, and it depicts the transfer of goods or services to customers at an amount that reflect the consideration. So a customer is defined as a party that has contracted with an entity to obtain goods or services that are an output of the entity's ordinary activities in exchange for consideration. So Accounting Standard Update 2014-09, it amends Accounting Standard Codification 360 Property, Plant and Equipment and Accounting Standard Codification 350 Intangibles to require the entities to apply the guidance in Accounting Standard Codification 606 on contract existence, control and measurement to transfers of non-financial assets that are not an output of the entity's ordinary activities. Now, what's the revenue recognition model? First thing is we need to identify the contract with the customer. First, we need to identify the contract. Second, identify the performance obligations. Third, determine the transaction price. Fourth step is allocate the transaction price. Allocate the transaction price, TP. Fifth step is recognize the revenue. So these are the 5 steps that we need to follow. This is a 5-step model. So step 1. Under step 1, that is identify contract, the parties have approved the contract which creates enforceable rights and obligations. Then the entity can identify each party's rights. Here the entity can identify the payment terms for the goods or services. The contract has a commercial substance. It is probable that the entity will collect the consideration to which it will be entitled. Now identify the contract means there should be 2 or more contracts, that it means a single contract, single customer, negotiated as a package with one commercial objective. The amount paid under one contract depends on the price or the performance under another contract. The goods or services to be transferred under the contracts constitute a single performance obligation. Revenue recognition model, second step, that is identify performance obligation. So promise in a contract with a customer to transfer either goods or service or the bundle of goods or service that is distinct, or the services of distinct goods or services that are substantially the same and that have the same pattern of transfer to the customer. Third step is determine the transaction price. So the amount of consideration to which an entity expects to be entitled in exchange for the goods or services promised under a contract, excluding any amount collected on behalf of third parties. It also includes the variable consideration, significant financial components, non-cash consideration, and consideration payable to the customer. Like you can call it sales tax, service tax, discounts, refunds, rebates, everything will be included. Step 4, allocate the transaction price. So standalone selling price is equals to the price at which an entity would sell a promised good or service separately to a customer. So there are various methods to estimate the selling price. First, it is adjusted market approach. Second, it is expected cost plus margin approach. Third, it is residual approach. Here, under step 4 only, when the transaction price change, it should be allocated to one or more but not all distinct goods or services. Then step 5th, that is how to recognize the revenue. First, it should have a transfer, that is control customer. Then control transferred over time. Third, there should be various input methods and output methods. Now, what is contract cost here that we were determining? So contract cost means if the cost incurred in fulfilling a contract with her customers, they are covered under another codification topic, an entity should account for those costs in accordance with these topics. Otherwise, Cost should be accounted for using the guidance in Accounting Standard Codification 340-40 Other Assets and Deferred Cost, that is contract with customers, which was added to codification in accounting in 2014-09. Now, what are contract costs? The costs that directly relate to a contract, the costs that generate or enhance the resources that the entity will use to satisfy the performance obligations in the future, and it is also the entity that expects to recover the cost. These are all known as contract cost. An entity should expense the following cost as incurred: general and administrative costs that are not explicitly chargeable to customer, so these entities should expense these costs. Then cost of wasted materials, labors or other resources that are not reflected in the contract price. Third, costs that relate to the past performance that results in satisfied or partially satisfied performance obligations. Fourth, costs related to remaining performance obligations that cannot be distinguished from cost related to satisfied or partially satisfied performance obligations. So entity should capitalize the incremental cost of obtaining a contract if it expects to recover that cost. Cost that an entity incurs regardless of whether it obtains a contract should be expensed as incurred unless the costs are explicitly chargeable to the customer regardless of whether the entity obtains the contract or not. Now, what is warranty? Warranty means it's a separate performance obligation, and whether the warranty is required by law or not. The term of warranty, it covers the period, the nature of the task the entity promises to perform under the warranty. It is called as a law which is requiring an entity to compensate victims if its products causes harm or damage. An entity indemnification of its customers for liabilities from claims of patent, copyright, trademark or other infringement by entity products. Licensing intellectual property. So it should be recognized over time or at a particular point in time. It is not a separable promise. It's a single performance obligation. License is distinct. So we should check the nature of promise that is made. Licensing intellectual property means it should be recognized over time or at a point in time. There is a requirement or implicit understanding that the entity will undertake activities that will change the underlying intellectual property. Customer, here it is exposed to positive or negative effects as those activities take place. Those activities do not result in transfer of goods or services as they take place. Separability or non-separability of any other promises in the contract, as well as the nature of the entities or the licenser's performance under the license. So these are the how you charge the license the intellectual property. Then what are the rights of return and repurchase obligation? A full or partial refund of any consideration is made. A credit that can be applied against the amounts that the customer owes or will owe to the entity. Another product in exchange. So the entity recognizes revenue for these arrangements net of estimated returns by recognizing the following. First, revenue for the sold products reduced for estimated returns. A refund liability which is measured at the amount of consideration received that the entity expects to refund. An asset initially measured as the carrying amount of the inventory less cost of the recovery and the corresponding adjustment to the cost of sales. Then what is the right of return and repurchase obligation? An entity should evaluate the form of the promise to repurchase the asset in determining the appropriate accounting. When a contract includes forward or a call option, so as a lease, it can or must repurchase the asset for an amount that is less than the original selling price. As a financing arrangement, if it can or must repurchase the asset for an amount that is equal to or more than the original selling price. So if we talk about now the presentation and disclosure, So you need to show what's the contract liability, what is your contract assets, or if you have a contract liability or contract asset or receivable. Then disclosure area will be for the disaggregation of revenue. So revenue from contract with customers should be disclosed separately from other sources of revenue. Categories that depict we need to show those categories that depict how the nature, amount, timing and uncertainty of the revenue and cash flows represent. We need to also disclose the sufficient information to enable the users of financial statement to understand the relationship with revenue information disclosed for reportable segments under Accounting Standard Codification 280, that is segment reporting. Here we also need to show when the entity typically satisfies performance obligations, significant payment terms, nature of goods and services, obligations for return, refunds and similar terms. What are the types of warranties and related obligations, aggregate amount of transaction, price allocated to remaining performance obligations at the end of the period. So we need to show for some performance or a disclosure, we need to give the disclosure for performance obligations. Then revenue regarding the revenue recognition, revenue from contract. Related to revenue from contract, you need to show it should be disclosed separately. Categories, you need to show what is the nature, amount, timing and uncertainty of revenue and cash flows. Sufficient information to enable the users of financial statement to understand the relationship with the revenue information disclosed for segment reporting. Then under performance obligation, you need to show when entities typically satisfies performance obligation, significant payment terms, nature of goods and services, obligation for returns, refunds and similar terms, type of warranties and aggregation of the transaction price which is allocated to the remaining performance obligations. Then we need to show the contract balances, that means opening and closing balance of a contract asset, contract liability and the receivables. Revenue recognized in the period that was included in opening contract liabilities and from performance obligations either wholly or partially satisfied in prior periods. Explanation of the relationship between timing of satisfying the performance obligations and payment and the effect on the contract assets and the contract liabilities. Significant changes in the balances of contract assets and contract liabilities. Impairment losses presented separately from those losses on other contracts. Then we also need to show significant judgment and changes in judgment. So significant judgment is used to determine both of the following: expected timing of satisfying the performance obligation, or the transaction price and the amount which is allocated to performance obligation, including methods, input and assumptions. Assets recognized from cost to obtain or fulfill a contract. So judgment made in determining cost capitalized, amortization method used and the closing balance were the main category in the amortization expense. These all should be reflected. Now suppose a company A operates a car wash. The company sells cards that entitle the owner to unlimited car washes during the 12-month period following the card purchase. That is stand ready obligations, acquiring a right to receive on demand or service, not a separate deliverable, revenue recognized, proportionate performance model, life of contract and so on. Now you need to recognize the revenue accordingly. So whatever is the cost revenue that will be occur for those 12 months, that will be recognized in revenue and will be disclosed in your income statement. And any contract cost which is there, you need to disclose it following the presentation and disclosure point of view. Any contract balances which is pending, that also you need to disclose it, and any performance obligation if it is there, you need to disclose all of those things. Yeah, so that's all for today. We covered Accounting Standard Codification 605 along with 606. 606 is the updated version of revenue recognition. Earlier it was used as 605 under the US GAAP. Yeah, so that's all for today. Thank you so much for your time. If you have any questions, please contact BISP Solutions. Thank you.